All right, we're live. So welcome back to Dapp University. So let's do a quick microphone check here and make sure that YouTube is actually connecting my audio to the live stream. So if you can hear me down in the chat, let me know. And if you can, then we'll get started. Can you all hear my microphone okay? Awesome. Welcome. Welcome back to Dapp University. So today we got a lot to talk about. The first thing is a major milestone for crypto that has been reclaimed. All right, and why this is such a big deal for this space and what you need to know about this going forward. We're gonna look at a lot of other news updates that have happened in the space since yesterday. Again, we do these live streams Monday through Friday on this channel at 9:30 a.m. Central Time. Just turn on notifications, subscribe to the channel. You'll find out about those whenever we go live. We're going to check on the crypto prices and also answer some of your questions. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is designed to be financial advice. There's lots of scammers down in the comment section below. Just ignore them. I'll never give you my phone number or ask you to invest with me. Like, duh. Why would I do that on YouTube? So anyways, we got people jumping in the chat here. Awesome. Welcome. We got Culture of Automatic Beats, Synapse, I hope I'm saying that right, Dylan, Francis, Steve, Lisa, Adnan, Jonas. Welcome. Rich, awesome. So let's go ahead and jump into this. A major milestone has been reached again for the crypto markets, okay? I'm going to talk about why this is important and what you need to understand, like why this is happening. So basically, crypto has once again crossed the $2 trillion mark in total market cap, all right? So did this yesterday. It's actually, we're now slightly below $2 trillion. But let me talk about why this is so important, okay? Because this time is different from the last time we did this. So we last crossed a $2 trillion market cap. Let me just see here. The last time we reached over a $2 trillion market cap, cryptocurrency was basically on a euphoric run, all right? And now that things have cooled off, you can't quite see it on my screen here. Now that we have, fallen from these all-time highs, we've reached this $2 trillion market cap, it's actually being reached more sustainably. So, as the cryptocurrency price has been going back up, have you kind of maybe been watching the space or saying, things just don't quite seem as crazy as they were the first time that we did this? Well, there's lots of reasons, some of which I'll talk about here in a minute. One of the reasons we don't have this excessive leverage in the system right now that we did during this mania that was happening before. But another reason I want to talk about is actually who is buying, okay? So I alluded to this yesterday on the live stream, but I want to bring it up today and actually analyze it a little bit with some insights into who is participating in sort of the latest buying sprees for crypto. So yesterday, earlier this week, my days kind of run together here. We had the Q2 earnings report come out for Coinbase. All right, so Coinbase, the largest cryptocurrency exchange in the United States. Talking about basically who their customers are, how much money they're making, what they're spending money on, okay? So a really interesting insight from that report is that basically the Q2 profit tops $1.6 billion, and ETH purchases actually surpassed in volume for Bitcoin purchases for the first time ever in the history of Coinbase, right? So this is pretty big. So we talked about cryptocurrency really changing the market participants over time. We don't forget, if crypto markets are going to move forward and the prices are going to increase, basically you have to either bring new people in to buy or the same people have to buy more. And we talked a lot on this channel, on these live streams, about institutional adoption of cryptocurrencies and how that's been major for this particular market cycle, because you only need a handful of institutions to come into the space to buy in order to move the needle. You need way fewer of them than you need sort of retail participants, which are just people like you or I who get on, online and Google, like, how do I buy cryptocurrency, or sitting there just like researching this stuff and allocating their stimulus check or their savings or whatever it is, right? Basically, institutions move the needle a lot faster than retail. And so, we talked about Elon Musk Tesla buying $1.5 billion of Bitcoin earlier this year. That was a big moment for Bitcoin in general. But we also saw at the B Word conference, Elon Musk confirming that he personally held a number of crypto assets, and also that SpaceX had personally purchased Bitcoin. And that was something people were speculating on, was like, hey, did SpaceX do it? Because, of course, SpaceX is a private company. It's not a public company, so they don't have to disclose things like a publicly traded company does. But they can see confirmation of that. And we also see in the earnings report here from Coinbase, let's see, SpaceX. So in recent months, they have formed partnerships with industry leaders, including Elon Musk, PNC Bank, SpaceX, Tesla, Third Point LLC, and Wisdom Tree Investments. So we need to get confirmation that they have been working with Musk and his companies. So this is big for Coinbase. Of course, we did see a pretty good performance in the Coinbase stock as a response to this. But so this is a big deal. So the crypto markets are reaching this $2 trillion milestone. It's happening, and it's less crazy. There's less leverage in the system. And from all the data points that we can see here, more serious long-term players are in the game, which is really good news for the volatility of cryptocurrency prices. Because like I was saying, it's not as crazy as it was before. Part of that's less excessive use of leverage. You can actually look at funding rates and things like that. They're just nowhere near what they were before. But also, when you have sort of these diamond-handed long-term people getting in the space, that also, makes for a less bumpy ride, because they're not, going to be, buying the dips and selling the rips, so to speak. They're going to be way more long-term minded. Okay. So we can actually see a reflection of that in some of the cryptocurrency prices. Let's actually take a look at that right now. Let's go ahead and look at TradingView here. So, in addition to this market cap, this market cap milestone, we have lots of other milestones that I've been talking about some on this channel, but I wanted to specifically take time to call this out in the stream here, which is that Bitcoin, of course, has reached a lot of its long-term averages here. Okay, so basically, we've gotten above our short-term moving averages. We've gotten above our long-term moving averages as well. And the next sort of thing to see here is, can we hold these long-term moving averages to confirm this before we get completely bullish? Okay, so I'll just pull up on my screen here, make it TradingView. So what do I mean by that? So basically, we've been kind of in this period where we were trying to get out of this. We have broken above this long-term moving averages. All the short-term moving averages have reversed course, okay? So now the critical thing before we get too excited here long-term is, can we actually, establish ourselves above this, 200-day moving average and some of the other significant long-term moving averages, okay? I've been talking about you getting way more confidently bullish as we've gotten above these levels, okay? But sort of the final boss is actually holding this before we get, too excited about things moving forward. So same thing for the Ether price. As we've reached this $2 trillion market cap level, as we started to reclaim some of these averages, we've been kind of in a straight up line for a while. So I could very well expect some sort of pullback in the short term, all right? But again, what I was saying about the market participants in this space, who's buying, what's been happening, with the use of leverage, all that type of stuff, that the likelihood of a massive shock that's just going to send things like way down is way less than it was before. Now, as things get more vertical and more parabolic, let's say if we just 2x from here, that would be a different story. But at the current price level, still want to exercise a little bit of caution for short-term moves. But again, if you've been watching these videos, my personal stance on this is I don't really do a lot of short-term trading, especially on major stuff like BTC and ETH. There's a lot of my long-term holds. I mostly just like to get a sense of what's going on in the general overall market. So, going back to this Coinbase report here, a significant thing being that, Ether volume in trading surpassed Bitcoin for the first time in Q2 of 2021, all right? So basically, this is the percentage in overall trading volume. So basically, if you want to read this data here, Q2 of 2020, 57% of the volume on Coinbase was traded with Bitcoin. Q3, 32%, and you can see it kind of just diminishing here to 24% in Q2 2021. And you see the Ether trading volume went 15, 18, 14, 21, 26, and it actually flipped Bitcoin in terms of in terms of its trading volume, US dollar amount. So that's pretty significant because we talked about institutions kind of going down the risk curve. Institutional after cryptocurrency has been a new thing, starting out with Bitcoin, changing its narrative to a store of value, institutional grade asset, and then as institutions come into space, they naturally kind of follow the journey that everybody else does. You start with Bitcoin, and then you kind of work your way down the ladder to see what else is interesting here. And institutions are like most of them are going to be more conservative, but ETH is still a pretty strong bet for a lot of institutions, in my opinion, because it has so much going for it, right? And it has a lot of upside, even more upside than Bitcoin. And I think we're going to see, institutions that have a little more appetite for some risk, pile into ETH because of everything that's happening here. And we can see evidence of that. It's not just my opinion. Let me just pull it up here. So we can see this report here. So institutional clients are pushing, these firms to offer more ETH services. Okay, so Ether institutional demand is surging. That's what's pushing these firms to expand their services for crypto. Sources say Fidelity's clients are increasingly asking for ETH support. Okay, they basically already have custody services for their clients. So speaking of the ETH front, we do have more developments in the way underway for layer 2 scaling solutions. This is a really big, important thing for somebody says Dip builds character in the chat. Yeah, that's good. Yeah, that's the other thing about, and it's getting sidetracked here, but that was a good comment. If you hold through these massive corrections, like these 50% corrections in crypto, and you actually make it out on the other side and you're profitable long term, and it's a significant amount of profit for you, there are going to be people who are just like, hey, you're just lucky. And it's like, well, everybody who's successful, there's some degree of luck involved, but that doesn't mean it was just easy. You know what I mean? Like if you held through a 50% dip, it takes some conviction, and it's, especially if it's a significant amount of money, like that's going to weigh on your psychology, even if you believe in the markets long term, because you can't really counteract your survival instincts completely. And it's painful. I mean, I feel the same way. Even, I believe in crypto long term, but when you see those 50% dips, it's still hard to go through them. So anyways, layer 2 scaling solutions. It's just like anything else, anything else where something's inevitable that's out of your control, but you don't think it's going to it's sort of like that's what doesn't kill you makes you stronger. Well, that's true, but it still makes it incredibly painful. So anyways, layer 2 scaling solutions are huge for ETH. So basically, this is building a second layer on top of the Ethereum platform, making it faster, cheaper to use, because you can take a lot of the transactional overhead off the network itself and put it on a second layer that actually gets settled back on Ethereum. There's lots of different solutions out there. I've been talking a lot about Optimism on this channel, about Uniswap's launch on Optimism. Arbitrum is another one in the space with the optimistic rollup technology. Okay, and so we have an announcement from them yesterday. So in preparation for upcoming launch, we're happy to announce the release of the Arbitrum One Portal. Okay, so they do have a launch pretty soon, right? This is going to be big. So scoring through tons of the dApps, wallets, and tools you know and love on Ethereum, as well as new ones making their debut on Arbitrum. So you can see this portal. You can see basically all the applications that have, already, to my understanding, these are applications that have already integrated Arbitrum, and you're going to be able to use whenever they go to a unwhitelisted mainnet launch. That's kind of how these layer 2s have been rolling out. It's been a little bit of a walled garden, just initially, just to get things set up. And then my understanding is the rollout plan is to make this open, easier to use, easier for developers to build applications on top of, and also easier for end users to actually start, taking advantage of this roll-up-based solution. So you can see major players like Alchemy's here, Aave, Amy Finance, I'm not even sure what that is. Anchor, AnySwap, Band Protocol, right? Cream Finance, Coinbase Wallet. Well, that's pretty cool. So Coinbase Wallet would actually have native, Arbitrum integration. That's one thing I really want to see more of, is basically wallets and cryptocurrency exchanges, centralized cryptocurrency exchanges supporting layer 2s out of the box. Because at the end of the day, with layer 2 scaling solutions like optimistic rollups, you have to pay a fee to get onto the layer 2s, and then there's a withdrawal period that takes time to get off of. And so if centralized exchanges can basically support this out of the box, they can act as bridges and also make it easier for people to, move their funds around, all right? And cheaper, okay? So that's not very decentralized, but the reality is most people who are getting into the Ethereum network are entering through a centralized exchange of some kind. I mean, how do you get fiat currency in the system? You got to mine the cryptocurrency, or you got to do some other broker deal, or buy it through a cryptocurrency ATM or something like that. There's only so many ways, and the vast majority of people are going to use centralized exchanges anyway. So let's just support what they're already using, make it easier for them to use the tools that we're building. Somebody says annoying people say, "Oh, you got lucky." Yeah. Well, pretty easy retort back to that as well. You got lucky too. You're born at this point in history. One of the easiest times for anybody to take advantage of massive opportunities all around them. Most people just aren't going to be. Most people are too slow to change their mind. They don't want to get their hands dirty and figure things out. They don't want to. Yeah, it's like even if the opportunity is around you, you still have to do something to take advantage of it. Like even if you're buying crypto, you still have to. There's still some work involved. You got to hold through the dips. So it's not just easy. Somebody says, why is hard hat different? So it looks like there is a somebody says, why is I don't understand the question here. Somebody says, who is this Max Kaiser saying ETH is garbage and can be shut down? I don't have a lot to say in that regard. There's a lot of haters on ETH in general for a variety of reasons. There's a lot of people who think that Bitcoin is the only true coin that's even worth talking about. It's the only hard form of money. It's kind of like a cult-like stance, I would say. It's pretty close-minded towards ETH and the amount of utility that it has. A lot of the criticisms around ETH are basically that ETH was a pre-mined scam. It's well, how would you still consider ETH a scam at this point? I don't know. There's that. There's people saying that ETH has a bad monetary policy, that Bitcoin has hard-coded into the protocol. There's only going to be 21 million Bitcoins ever. That ETH's monetary policy changes all the time. For example, you have EIP 1559 coming into play. It just changed because now ETH's, moved towards becoming deflationary, but that wasn't set in the protocol from the beginning. So see, look, they can change it, but we changed it to make it better. That's the whole point, is that it can change, but it changes in a decentralized way from community coordination, and the only changes that are likely to get included in the protocol are the ones where ETH holders benefit. Okay, so people who have skin in the game and actually are going to maintain the network. They're the changes that are you're not going to change ETH in a way that makes it bad for people that want to use it, right? So that's why I get a proof of stake. The issuance drops even more. It's going to be good for ETH. And when we have validators running the network, you have people with even more skin in the game who are going to be running the clients, running the nodes, and basically they have even more incentive to only upgrade their nodes if changes are favorable for them. Let's see here. Someone says your crypto wallets will soon be KYC'd. Well, most crypto wallets basically are KYC'd already because if you use an exchange, they're KYCing you in most cases. I mean, some people are able to get into crypto exchanges without KYC, but if the regulators ever came knocking, like you had to get that money in there somehow. So you did it through some funding source they could trace it back to you, and then they're going to be able to see what wallets you withdrew your coins to, and even if you send it around to 1 million wallets, they can still trace you. It gets harder to do if you're using something like a mixer technology, other stuff, but it's like most people are going to be able to find you. Let's not say, if somebody really wants to find you, most people are going to get found. Put it that way. A very small percentage of highly sophisticated people will be able to, hide, but a very small number. It's getting harder and harder as new people enter the space. Someone says thoughts on the maker hack. So let me just check, see what's going on here. I've seen the Poly network hack. So I actually haven't seen anything about the maker hack just yet. Let's just pull it up on my screen here. Let's just see. I haven't actually. This is the first time hearing about this. So let's just pull up the article and see what's going on. I heard about the Poly network hack. So I'm actually going to do a video about that because a lot of people have asked about it. It's kind of hard to do really detailed explanations of some of these hacks because you have to do one or two things. You have to read an article about it, which may or not be very accurate. Or number two, you actually have to sit down and audit what happened in the hack. And that's pretty time consuming, and I don't always have the time to sit down and do it because you have to verify a lot of stuff and look at a lot of on-chain data to confirm, what went down. So, anyways, so this is just brand new to me. Somebody's talking about this in the chat here. So breaking, it's a DAO maker. Is this DAO maker? This doesn't look right. DAO maker. What is DAO maker? Is it MakerDAO or is it DAO maker? Let's just see. Let's look here. Hold on. Oh, DAO Maker funding platform. Okay, so this is not MakerDAO. I don't even know what this is. I'll have to come back and do some due diligence and actually check on it. I'm about to say if MakerDAO is hacked, that's not good. But DAO Maker, this looks like some. I don't even know what this project is. Someone says MakerDAO, aka I know what MakerDAO is, but this doesn't look like MakerDAO. This looks like DAO Maker. What is DAO Maker? DAO Maker becomes latest DeFi hack victim. 10,000 USD accounts affected. That's not MakerDAO. Yeah, crowdfunding platform DAO Maker. Yeah, I don't even know what that is. So we got any more questions here in the chat? So just full disclosure, I don't think MakerDAO has been hacked. I don't want to spread fake news here. Don't go away from the live stream saying, "Oh, MakerDAO was hacked." I don't think that's what happened here. All right, so let's So somebody says also, if anyone believes these hacks are real, I have a bridge in Alabama I want to sell you. Look up the term false flag. This happens left and right every time a catalyst hack happens. So yeah, one perspective on some of these hacks is that a lot of them were inside jobs. Okay, where they get hacked, and then basically you know who knows what the actual truth is. Like, did they get hacked? And then now that's a term of like, oh, we basically, it's an inside job in the sense of maybe like somebody on the team was just like rogue, and then they did the hack and ran off with the money, and then fled and nobody can find them. Or was it like an inside hack, and then everybody knew about it and they just like kept the money, and it's sort of like a soft rug pull. Yeah, that's kind of what I think the person here is asking. So do you think it would make DeFi look bad for a while? So first and foremost, I don't think that MakerDAO was hacked. Just for the record, I'm gonna repeat it over and over and over again because I don't want people walking away from this video being like, oh my gosh, MakerDAO was hacked. So anyways, the Poly Network hack. Again, I'm gonna do some more research on that. I don't think it's like a death knell for DeFi. I mean, Ethereum's had a long history of projects getting hacked. I think it scares some people for a little while, especially if anybody here is affected by the Poly Network hack. Like, I'm not trying to make light of the situation at all. I'm just looking at a bigger picture for the overall technology. So basically, we started off with the DAO hack in I think it was 16, I want to say. I can't remember off the top of my head. That was a major event in Ethereum pretty early in history. We saw a bunch of hacks happen in 2020, 2021. The technology keeps moving on. We actually learned from it. One perspective on hacks is, first of all, everybody should be getting their code audited. That's one of the reasons that a lot of these apps actually, end up with exploits, is basically people rush and they don't get audited. They push something out there and then, they get exploited. Okay. So that's one thing, is we need to slow down for a lot of reasons in DeFi, but the incentives are there to just move fast and break things. But, well, guess what happens? You're testing in prod. And then, some people don't know that you haven't done all the necessary work, and then they get victimized. So, I mean, I say victimized. I mean, they're the ones putting their money into something that's higher risk. So it's kind of a two-way street here. But the other thing to consider is that, these hacks are going to be inevitable, and basically the only way to really know how vulnerable DeFi is to put it out there and let people try to break it. Okay, and the incentives are there for bad actors. I'm not saying they should try to exploit the protocols. What I'm saying is it's human nature and it's inevitable. And then basically, whenever these things happen, we learn from them, because you don't know what you don't know at the end of the day. And people who are using DeFi in this very early phase need to be aware that the behavior that they're engaging in is high risk. Okay. So in a perfect world, everybody would know that. Well, in a perfect world, nobody exploits protocols. But in one step down from that, assuming that people are going to exploit the protocols or try to, it's better for people to know they're engaging in high risk activity, so we can learn more about this stuff over time. And then the last point is, about these exploiters, is basically it's really hard to get white hat hackers to really find all the vulnerabilities because of the incentives. Right, so you might pay this person a modest bounty. I mean, let's even say you pay them like $1 million if they find something wrong with your protocol and they fix it. Right, that's cool. It's $1 million, but some of these hackers are walking away with $100 million. You know what I mean? So, and it's not just from one project. So if they're sitting there going like, I want to make $100 million, they're incentivized to find loopholes in pretty much everything. It's going to attract some really sophisticated people. That's what the incentives are. I'm not saying it's a good thing. I'm saying it's human nature, and that's how we find this stuff out. It's kind of the only way to know. Somebody says crypto is under attack from every direction. It's true. It's a crazy world. So what constitutes a hack? So I know there's different language in hacks versus exploit. Hack technically is getting access to somebody else's private privileged information that you're not supposed to have access to. Exploits basically exposing a vulnerability and taking advantage of it. The line's kind of blur in my opinion. And most people hear hack versus exploit. Most people don't differentiate between the two. So hack is the common language that most people understand. That's why I say it a lot. Somebody says, that's why I focus from learning people like you. Boot camp is awesome. Awesome. That's great. I'm glad you're enjoying it. All right, everybody. That's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. And, if you're as fascinated with this technology as I am, you may get your hands dirty. How can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. You'd have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.